22-2, work together, step 2. Step 2 says we're going to complete the statements of stockholders' equity for the current year. As of January 1st, Travel Light Corporation has issued 4,500 shares of common stock with a par value of $1 per share. During the fiscal year, the corporation issued 500 additional shares of common stock. The balance in paid-in capital in excess of par common on January 1st, 2017 was $8,000. As of January 1st, Travel Light had not issued any shares of preferred stock. During the fiscal year, it issued 500 shares of $10 par, 5% preferred stock at par value. Where appropriate, we need to enter a 0. So again, they have created our heading, they've put in all of our titles for each line, and we simply are going to need to fill in our numbers. So, and they even put it where we need to fill in our numbers. First thing, it says that on January 1st, we have $4,500 shares that were issued. So we need to look here. Our par value of those shares are $1 per share. So we're simply going to take $1 times our 4,500 shares, which we would get $4,500. Next, it says issued during the current year is 500 shares. Again, $1 par value times those 500 shares would give us $500. So our balance, we do need to make sure, now this they filled in for us, but here we need to make sure that we list how many shares then were issued. So we started with 4,500, we sold 500 during the year, so we're going to end with 5,000 shares. Now, these two numbers added together would equal 5,000. The other way that we would check to make sure that we're right is $1 par value times those 500 or 5,000 shares would equal $5,000. All right, moving on. Our next section is our paid-in capital in excess of par common. It says our balance on January 1st is the first thing that we're going to fill in. So we need to go up to our directions to fill in what our balance on January 1st is of paid-in capital in excess. So here is that section. So that was $8,000 they're telling us. And then it says issued during the current year. So issued during the current year, we need to look at, when we look at our adjusted trial balance, I'm going to scroll down and I'm going to find in my paid-in capital in excess of par preferred, common, which is 20,000. So I'm actually, that's my balance on December 31st. So I'm actually just going to go ahead and put in that number, 20,000. Now, to figure out what I have here, I'm going to subtract those two numbers. So that tells me the issue during the current year is 12,000. Okay, next section is going to be my capital stock preferred. And so that's what they're talking about this section here. Okay. And so it says $10 par value, 5%, January 1st, 0 shares were issued. If 0 shares were issued, that's simply going to be $0. Okay. Remember in our directions, it did tell us to put in a 0 if needed. Next, it says issued during the current year was 500 shares. So just like we did up here, we're going to take our 500 shares times that $10 par value, which is simply going to be 5,000. Okay, then our balance, which again, in this case, we had 0, and then the shares that we sold during the year were 500. So our balance on December 31st is just that 500 shares. And our balance, adding those two numbers together, would be 5,000. The other way that we could do that is make sure that our 500 shares times that par value equals this number as well. Okay, our last section is our retained earnings, and it tells us that we need to put our balance on January 1st. We're going to look at our adjusted trial balance, and we're going to scroll through. We're going to find where it talks about our retained earnings. So our retained earnings is this number here. That's the number that we're going to use for our balance on January 1st. So 19,620.77. Then we need to look at our net income after federal income tax. So on that one, we can go to our income statement. Here's our net income before. Remember, we are looking for our net income after. So it's going to be this number here, 62,068.08. Less our dividends that were declared during the year. So for that one, sorry, we're going to go to our adjusted trial balance, not our income statement. And we're going to find our dividends. Here are our dividends right after our retained earnings. Our dividends are listed as 21,600. Notice again, watch those clues here. It tells us less, so we're going to subtract these two numbers. That should give us a net increase of $40,468.08. Next thing then is we need to figure out our balance. So we're going to take our balance on January 1st and we're going to add to it our net increase. Our balance on December 31st then should be $60,088.85. And then the last thing is we need to figure out our total stockholders' equity. So to figure out our total stockholders' equity, we're simply going to add all of these numbers on the far right. So our balance of our capital stock common, our balance of our paid-in capital in excess of par, our capital stock preferred, and then our balance of our retained earnings. Which our stockholders' equity then should come to $90,088.85. We can grade step 2. And you can now watch the next video for step 3.